Welcome to the Daily Update Podcast, where I'll go over the action in the market for Monday, December 8th, and we'll see how things look for Tuesday, December 9th. The S&P 500 closed down 0.35% at just under the 6850 level after trading as low as the 6830 level intraday. The Nasdaq slipped 0.2%, the Dow lost 0.5%, and the Russell 2000 small caps actually finished marginally higher. Volume remained below average, but has been ticking up slightly from last week. Looking at the overall tone and bias of the market, the big picture trend remains bullish across all three timeframes, but conviction continues to fade. Monday felt like a classic week down day. Poor internals, no real follow-through buying, and a distinct lack of leadership from the usual mega-cap suspects. The S&P 500 is showing short-term weakness, yet structurally there's no serious damage yet. Price is still above the 20, 50, and 200-day moving averages. What is needed is a convincing upside move with an increase in volume while also showing leadership from growth to restore the positive momentum ahead of Wednesday's main event. All eyes are on the Federal Reserve meeting, which will conclude Wednesday at 2 p.m. Eastern. A 25 basis point rate cut is essentially fully priced in, and the CME Fed Watch tool sits now at a 98% chance of that cut happening. The risk, as always, is the buy the rumor, sell the news. The emerging consensus narrative is for a hawkish cut. Cut now, but signal a much slower pace of easing in 2026. Interestingly, the 10-year yield is climbing into the meeting. It closed on Monday at 4.17%, up from being under 4% the day before Thanksgiving. Lately, yields have been falling on the rumor and rise after the fact. This inversion of typical behavior is worth keeping an eye on. Looking at the price action for Monday's session, the S&P 500 opened marginally higher and saw immediate selling pressure that broke through the daily pivot at 68.75. Prices continued to fall below S1 at 68.54 and briefly fell below S2 at 68.37. Prices finally set the intraday low at the 68.30 level before seeing a late-day push to erase a lot of the earlier losses. The S&P ended up closing just below the 68.50 level. The price action was not catastrophic, but definitely not the kind of price action the bulls want to see just 2 days before a Fed decision. Those positive areas that are keeping the market looking good? As stated earlier, price remains above all key daily moving averages. The small caps and transports continue to show relative strength. Semiconductors and the broader tech sector actually outperformed in Monday's session. There are several risk-on breath measures, including the high beta to low beta ratio. December seasonality historically favors strength in the second half of the month. Longer-term weekly indicators and the McClellan Summation Index remain bullish. The yellow flags to keep an eye on: growth continues to underperform value. Key growth-to-value ratios remain below their moving averages and are actually flirting with longer-term death crosses. Megacap leadership is fraying. Both Meta and Netflix are now signaling a death cross as price continues to drop. All three smart money indicators have flipped over to negative. The advanced decline oscillator is rolling over after giving an extreme positive reading. Sentiment gauges have cooled. The daily and 5-day put call ratio is picking up ahead of the Fed meeting. The Hindenburg-Ullman remains confirmed and doesn't expire until roughly December 26 unless there is a fresh spike. Last week's unconfirmed ZWAG NYSE Brett thrust failed to be confirmed by Friday's session, another subtle negative. Other notable observations include the dollar is strengthening but still under 100 with the dollar index. Corporate buybacks have slowed dramatically, which may have been impacted by the earnings blackout period. Wall Street 2026 year-end targets are clustering aggressively higher. This could be classic crowd psychology, which is a warning sign. And finally, Netflix shares are rolling over amid takeover chatter involving Warner Brothers Discovery, with another possible bid coming from Oracle. This is something to keep on the radar. Looking ahead to Tuesday, December 9th. The S&P remains structurally in an uptrend, but momentum is starting to stall. The short and intermediate term ADX trend indicators are not showing much conviction. Tuesday needs to see a convincing rally on expanding volume, with clear growth mega-cap leadership to flip the short-term picture back to decisively positive. Without it, the risk tilts toward continued choppy action or a potential sell the news reaction on Wednesday after the Fed makes their announcement. In conclusion, we remain cautiously bullish, but conviction still remains low. The S&P is in wait-and-see mode, fully focused on the Fed and desperately needing growth leadership to reassert itself. Thank you very much, and I will talk to you in the next podcast.